All right. All right. So today was pretty tricky, right? But if you really know what's going on, you could have capitalized how I capitalized today, right? So let's break down today's price action, right? From and how I caught my trade and the reasoning behind my trade, which is called confluences, right? So right here we have 9:30 right here. So right here is a 9:30 open. Let's make this a little bit bigger. We have a 9:30 open right here. Now, usually when you see a straight directional move at 9:30, it's usually called the Judah swing. The Judah swing is literally the fake out, the manipulation, right? So we opened up right here. We manipulated down to this area, right? This area is a 1 hour fair value gap, right? So this is a key area where I'm expecting it to bounce, right? And to displace from, right? So cool. Comes down into this level, we tap it, we sweep it, we displace higher. Now, this is the first percentage fair value gap. This is a high time frame PD rate that you actually want to have on your charts all the time because you can take trades off of this level, which is the first percentage fair value gap. Now, we get a tap into it, we get a displacement down, right? We make a higher low, and then we make a higher high from here, which is basically a market structure shift. So this looks like the play that I usually catches, right? Which is a low, high, higher low, higher high, which is a mitigation, right? It's kind of like a breaker, but it's not a breaker. It's a mitigation block, right? So I got in right here because we got above the first percent fair value gap, one confluence. The second confluence is basically we created a order block right here. Third confluence is we literally tapped into a area where I'm expecting it to bounce at, right? To displace from. Okay, so that's 3 to 4 confluences. And right here, this small little zone right here is a new day opening gap. So when you see price comes down and it fails to touch or to reach equilibrium of this new day opening gap, that's signs of bullishness. So that's 4 to 5 confluences on why. Oh, six, which is the mitigation block, which is the entry model. And we have buy side, right? We have relative buy sides. You see, we have double highs, right? And we have multiple highs above us. And right here, this is a new week opening gap. So as you see, once we actually close above it, equilibrium, I mean, we're going to use it as support to rally up, right? So that's the play that I caught. I caught it right here. I was using also another confluence is right. Another confluence is basically this CIBI. So this is on the way down. It created a fair value gap, a bearish fair value gap. So once we break above it, I wanted it to be held as support. So we actually have so many confluences on why this trade worked and this trade panned out to perfection, right? We have a great risk to reward. We got a great risk to reward. I got in right here. TP was right here. So you see how I caught 100 points and I was risking about 28 points. So this is a great risk to reward, about a 3.6 R trade, all the confluences, all of the reasoning why. And this was just an easy trade, but you could have got faked out if you did not know what was going on. So if you have any question, any comments, you put them below and I will answer them as I see them fit. And I appreciate y'all for tuning in. This is my trade recap. This is the trade that I caught. I made about $1,200 on my prop firm account. And I did not trade the trade on my live account because I thought it was a little bit of a low probability trade. So I caught it on my prop firm, but it happened to be a high probability trade. So appreciate y'all for tuning in. And remember, become the person who do the thing to eventually have. So in order to be a profitable day trader, you must become the day trader who can cash out to eventually have Mr. or Mrs. profitability. So this is right now where price action is right now. So market open here at 6 o'clock, rally down, came back up. So now you see here, all of this level right here is relative highs. So we did sweep out in internal highs, but we left buy side up here. So now we have, this is buy side, we have a sell side right here. right? And we have sell side right here. Multiple levels. So, and if you draw the fib, if you draw a fib from here to here, this is all of this is premium, all of this is discount. So I will be expecting it to basically, it took out the highs. Okay, cool. Leverage to high. I'm expecting it to come back down, take out maybe these lows or these lows, and you see how right here we're in a fair value gap right here. So it could actually sweep all of these lows right here. So it could actually sweep all of these lows, then to head back up to the upside. But yeah, man, I appreciate y'all for tuning in, and let's get it.